Okay. Good morning. Good morning, ladies and gentlemen. It is nice to see this energetic crowd, traders from around the world, gathered here in Istanbul. Welcome. My name is Doğan Baysal. I am with SIBA International, based in Houston, Texas. We've been importing steel from Turkey and around the world for over 30 years. As you may know, this is our 70th IREPAS. We've been gathering in different places around the world for the last 30 years. I hope this conference will be just as productive for all of you as in the past we had. For those who join us the first time this year, and if you're wondering why we have meeting at 10:30, now at 11, well, our emphasis is for your networking and discussions with your clients and vendors as much as attending this conference and group meetings. Of course, we also wanted you to be awake after last night's drinks. Like in the previous conferences, we asked many of you to send us the subjects you want us to discuss, questions you have, or simply your comments. I have gathered some of the questions that I have received last night, and I would like to start with them. And here we are. One of the most asked questions this time is about anti-dumping, and it has really 3 different parts. Let me start with it. U.S. recently initiated an anti-dumping investigation for 2 major importing countries, Mexico and Turkey. This will affect hundreds of thousands of rebar that come to the U.S. Now, the question number 1 is, will this pass the ITC preliminary investigation? And if you don't mind, I'll sell all 3 of them and then we can discuss. The second one is, will this affect the rebar prices in the 4th quarter of 2013, or really will it take effect in 2014? And the last one is, if this investigation finalizes with serious dumping margins, what will be the next import destination to the U.S.? You're free to answer any one of you. I'd like to hear your comments on this issue. Well, any comments on anti-dumping? I thought you all had some. Go ahead. Serdar, go ahead. Can you have the microphone there, please? Do we have a microphone?
My name is Serdar Koçtürk. I am the ex-president of Turkish Steel Exporters Association, and I am still a board member. I am also the general manager of Kibar Foreign Trade Company. Well, for USA anti-dumping issue, I would like to comment a few points. We are closely monitoring all our steel exports from Turkey to major destinations, in fact all the destinations. Monitoring means checking average export prices of major steel products from Turkey, monthly average export prices. This has been done to monitor, to make early warning if there is a risk of dumping in certain important destinations for Turkish steel exporters. And in our monthly meetings, we have this monitoring table which is showing our average export prices. For USA destinations, we are sure that there is actually no dumping from Turkish side when we make the studies, when we make the comparisons with local market prices, with cost prices, and with all the considerations. However, we are also sure, on the other hand, that in our board meetings we discuss the issue, and our board members are all the major steel producers of Turkey, and they are the major exporters to USA also. And they are sure that in ITC there will be some injury decision. So this is not fair. It is very strange. All of us know that USA is one of the major suppliers of scrap to Turkish steel mills. Just consider that a Turkish buyer is buying scrap from USA, shipping it all the way from there to Turkey, handling it. Some of them, they have their own port, but some of them have inland transportation. So they are converting into D-bars. They are adding another freight element in to ship back to USA. And then this cargo lands there. Just imagine the competition between a local producer who's buying a local scrap and converting it into D-bars, and this producer is complaining and saying that I am injured. What kind of injury is this? Okay, this is an injury of overpricing, if you consider. This is an injury because of excess margins, if you consider excess margins, excess profitability. And that's why I'm saying it's unfair. Okay, USA market, according to our statistics, is an important market for Turkey. And also, it's an important market for USA scrap industry, which is creating jobs, which is creating value for USA. And Turkish exports are also very valuable to balance the pricing in USA. Imports, in general, are important for balancing the prices. For whom? For the American public, it's important. Not to pay exaggerated prices. For free competition, it's important. Also, it's important for American government investments, government projects, infrastructure projects. So there should be a balance of prices, and competition creates the balance. If you avoid competition by pressurizing the marketplace, by lobbying in ITC, okay, you can achieve some prices, but this is not going to create the best balance for the people. This is not going to create the best balance for the industry. We should be sure about it. So, as Steel Exporters Association, we hired our legal advisors. We are lobbying against it, and we also hope that this is not going to harm our industry very, very much. But when we check the numbers and statistics, we see that America is important, as I told you, and we ship around 50,000 tons a month. Changing plus minus, but this is the market segment, and it is less than 10% of overall Turkish D-bar exports. USA market size is this much. So I just want to inform all participants here that Turkey is facing one of the unfair actions from our partners in USA, our competitors in USA. And we only hope that the damage will not be so significant. In fact, we also have similar problem from Egyptian side. Egyptian government is also has created some problems for Turkish imports, and as Steel Exporters Association, we tried very hard to protect that market as well. So it's coinciding with this problem, Egyptian problem. America is added on that. So for our industry, it is not good days, I should say. Thank you.
Well, thank you very much, and I'd like to see if anybody else wants to have a comment. But let me just start saying that for the preliminary ITC investigation, the threshold is really very simple. So yes, chances are it will pass. but for later on, it's really tough to prove injury, but we'll see how that will come out. Any other comments from the audience? Well, we have a petitioner for the anti-dumping here. Michael's company, Nucor, is a petitioner. Maybe Michael has some thoughts on this one.
There is a process that has begun in the United States because our company and the other major producers of rebars in the United States consider there's been a surge of imports of rebars from Mexico and Turkey into the USA market, and we believe that we've been injured. This is going to be investigated by the ITC, and they will render their decision. It's not something for us as a producer to speculate about, and everyone will have its day in court, so to speak. Nucor Trading is not very much involved in exports of rebars from the United States, and we're not very involved in rebars being imported to the United States, so it's only my personal opinion.
Let me ask you this. There's probably two parts to it. Do you think that, or I don't know, if Turkish government really subsidizes exports of any kind, or rebar, I should say, to any country, including USA, is there any subsidy from the government? So it's all free enterprise that's selling the rebar? Please.
Well, in the past, Turkish government had certain subsidies for electricity, etc., but and freight subsidies we had, but this is all in the past. Now, on the contrary, Turkish government is creating some extra costs on Turkish steel exporters, and they are paying some extra tax on scrap imports for environment. They are paying some tax on electricity for the Turkish television, which is silly, but it's also a high cost content. So because of our commitments to European community after the signature of custom union membership, Turkish government cancelled out all the subsidies, and Turkish industry is not subsidized at all for investments also. We cannot get any subsidy which other industries are enjoying in Turkish market. So we recently, as Kibar Holding Group, we invested in a stainless steel production facility. It's a considerable investment. It's $350 million of investment with POSCO Korea. And believe me, Koreans were so surprised to find out that they have no dollar subsidy from the government for such a big scale of investment. And even for value-added, they had to pay value-added tax on the equipment imported to Turkey. So I clearly decline that Turkish steel industry is enjoying any subsidy, and this is a reason for anti-dumping.
Well, I'm going to say we as United States do subsidize the steel industry. We do, like let's say a Turkish mill came to US and started a new pipe mill, or starting a new pipe mill, and we are getting all kinds of subsidies, including the land and the taxes and all that. But that unfortunately is not fair everywhere. The second question on that one is, how would you compare your exports to the US versus to the rest of the world? Do you have almost the same prices that you're exporting to US and versus to Middle East or anywhere else in the world? Maybe you can answer that question again.
Well, FOB basis, we are comparing our exports, and USA market prices in general, in average, I should say, has never been below the other destinations, according to Turkish Steel Exporters Association's figures. So we compare it. The highest price is by nature is Iraqi market. Iraqi market is paying really the highest price. I should be transparent on that. But afterwards, USA price is coming as the highest next level. Our top destinations are Iraq is #1, United Arab Emirates is a major destination. Egypt was very good destination until the recent problems. And USA is among the top 5, top 6 destinations. But the quantities involved, surge of imports, we should really consider this wording, surge of imports from Mexico and Canada. Really, what is the size? Maybe Michael can give us some figures on that. What is the total consumption of D-bars in USA market, and what percentage of this is coming from Turkey in, let's say, 2012 figures, and what percentage is from local producers?
Michael, would you like to reply?
I don't have those numbers, sorry.
Bernd would like to talk.
I just would like to jump in here real quick. I can tell you about the import figures here, and I think that the domestic consumption of rebars traditionally is between 7 million, 6.5 to 7.5 million tons, out of which in 2012, 575,000 metric tons came from Turkey and 260,000 metric tons came from Mexico. I didn't figure out the percentage, but there are the numbers, okay? So far this year, I think that's why the Turkish producers got a little bit into trouble. Through September, and these are the preliminary data for September, also for August, but through today, they have imported almost the same amount this year in the first 9 months as they did last year for the entire 12 months. That caught the attention of the domestic suppliers. Now, you are very high. The imports have surged, indeed, compared to 2009 and 2010, but it can be argued those were very weak years for everybody. Your imports into the US have not surged compared to the watershed year of 2006, when Turkey had 1.1 million tons of rebars coming into the US. So compared to that number, you are actually way below. So.
Thank you, Bernd. I guess the second part of the question is, will this affect the rebar prices in the fourth quarter, or it will start taking its effect on the, later on in 2014? And I'm talking about during the investigation, and chances are this investigation will take close to 12 months. So during the investigation, there probably will be no more imports coming from Mexico or Turkey. So we expect some surge or some in pricing in the United States. Any comments on that one? Bernd, would you like to say something?
About
price increases.
I was left speechless by that question, but anyway, yes, I mean, of course, whenever there is a dumping action, people always expect that the prices might go up, because especially in this case where Turkey is such a dominant player, such a dominant importer of rebars, have the prices gone up? I mean, in principle, I haven't seen it. We have other players. So far, the action, trade action has not had any, has not made any difference, in my opinion. Now, that also leads to the statement that I wanted to make. One of the reasons that the domestic rebar mills in the United States couldn't increase the prices as much as they would have liked to is domestic competition. It's not only us. I mean, we've had many cases where we or our colleagues from other trade, not colleagues, our competitors from other trading companies couldn't make any sales because the domestic prices were so intensely competitive that we in certain areas couldn't even compete with it. So the domestic suppliers have their problems that there is a very intense domestic competition. It's a smaller market now than it used to be, and that's why we have to fight for our shares, and they have to fight for their shares.
But
so,
Bernd, if we take 750,000 tons out of the market, don't you think the domestic mills will have a field day to increase their prices? Back.
yes.
Yeah, regarding the pricing, I think it's, rebar is a pure commodity product, and it'll flow around the world to the best paying market. And once the trade case was filed in early September, within 3 weeks, I probably had 3 to 4 offers on my desk from various countries that weren't dumped to come into the States. So my impression is it'll be a balloon effect, and we'll open up more countries to import to the U.S. if we lock out 1 or 2 specific countries. That's typical in any trade case. Look at the wire rod cases, you look at the pipe cases. China was dumped in 2008 on OCTG pipe, and within 2 years the Koreans were there and took up every tons that they had shipped. Now there's another dumping case on OCTG with the Koreans at the target and 8 other countries. So I think the winds are blowing in the U.S. In favor of the domestic mills. The OCTG case was quite successful in early July. The ITC voted 6-0. It was clean through the system. That was an extremely complicated case. So the domestics went ahead and said, okay, sounds good. So the next one is rebar. The next one could be rod, could be a variety of other products to follow that. But in terms of the pricing structure, I honestly don't know, obviously, what the price will happen in the U.S. in the next 6 months.
Right.
But in general, with lack of true fundamental structural demand in the U.S., you won't see prices pulled to an increase. I think they'll be pushed at some point by the domestics, and we'll see what happens.
Tom, you're making a very good point here, because as I said before, one of the underlying issues was that for the since 2008 actually, the market has been kind of soft, then it got a little bit better, but it really isn't all that great yet. It's not the way it used to be, and the domestics are struggling with that concept too. So it's not only a matter that the imports spoiled it, it's also a smaller pie that the domestics are fighting over. And I fully agree with you. Yes, so there might be some question marks for imports from Turkey, imports from Mexico, but there are other players. They've already come out. So,
Tom, I was talking to a major trader who brings a lot of rebar to the U.S. Before this conference, and I had the same comments. I thought, well, they're still coming from around the world. What's the difference? And his comment was very interesting. He says, where am I going to find a country that's going to give me any grade, any length, any time like Turkey does? So it's and it has some truth to it, because I remember, when we had the first anti-dumping, we used to go around the world looking for steel, and we could have mills give us 3,000 tons, 2,000 tons, and sometimes limited, and we had a lot of delays. So you can't really get as reliable supplier as Turkey, where really you can get anything you want at any time. Michael, do you have any comments further on this one?
No, obviously, the issue of displacement of tons from one market to another is also of major concern, because, as Tom mentioned, as soon as one origin is pushed down, the risk today is that 3 origins come into the market, and if the pricing of rebars actually goes up in the United States, then obviously there will be more opportunities for other people who have been marginal players in the rebar import or export business in the United States. But this is also a major concern for the trading community concerning the Chinese exports, because wherever China can export steel, and their major markets on exports are South Korea, Vietnam, and India, all these markets are buying less steel from them than they were 1 year ago. So therefore, the Chinese are obviously looking to replace those areas of destinations. And I believe today or last week there was a report from Platts that rebars had now gone down in pricing into the Singapore market from China, and the prices were concluded at $525 to Singapore. Nothing that I know specifically, but that's what's been reported. So this is dramatically lower than anything that Turkey can offer into the marketplace, and you might consider that to be over $100 a ton lower than what Turkey has been traditionally exporting. So every ton that goes out from China into markets like Hong Kong, Taiwan, Vietnam, Singapore, Burma, Middle East, Lebanon, Saudi Arabia, these tons are sold at very, very low pricing, and it takes away market share from Turkey, takes market share away from other domestic producers in those countries. So I believe that is a bigger concern for the trading community than specific trading cases.
Well, Michael, I'm glad you mentioned the China factor. Actually, China used to be the major exporter of pipe to the USA, and we had an anti-dumping in '09. And since then, yes, Korea did take its place, and Korea became the major exporter to the US. But Korean prices have been about $100 to $200 over the Chinese price. So the prices in the US did increase dramatically, and Korean prices really compete with, close to domestic prices, versus the Chinese prices were a lot lower. So I think that when you really take the Turkish and Mexican imports out, you will see other countries come in, but not at the same conditions and not at the same price level. Any other comments on, please?
Hello, this is Carlos with Tate Steel. Just wanted to comment that now that you take Turkish producers and Mexican, basically the acero, out of the U.S. market, we will see prices coming up. Turkish mills were very dominant. Basically, Habash and Ishtash maybe accounted for 60 to, I would say, more like 80% of total exports to the U.S., for example. The acero in Mexico by themselves also had a large market share. So the prices were low enough to keep a lot of other countries from entering this market. So now that that seems that there will be out, prices have jumped another $30. And I honestly believe that the prices will come up another $20 more, so for a total of about $50 increase, in order to put on the basket for suppliers another 5 countries only. And yes, we will not be able to get everything that the Turkish mills were able to provide to us, but the truth is that the effect of Habash, Ishtash, and the acero in the market, it was better for them than for the traders. So at the end of the day, I think it's a more beneficial market for us in the mid and long term.
Carlos, I'm glad you mentioned that, but I'd like to know if you think these price increases will be affected in the fourth quarter. I know that you're mentioning the $20 increase that we automatically see in the fourth quarter. Do you expect the prices to increase even higher in 2014?
I think so. The smallest scenario that I see is there will be a dramatic reduction in the flow of imports for November and December, and most probably till January, although there is a couple of alternatives for January arrivals. Still the volumes will not be enough. And because of that, our regular customers will be buying more domestic bar. The mills are going to get busier, and the lead times are going to get longer, so that's going to push the prices up. We have seen an immediate effect of about $20, but the truth is, if we were to increase, to expect another $30, we need another 60 to 90 days to see something like this, because the domestic mills have been low. But if they are going to be full of with orders, they're going to increase prices for sure. And honestly, there's nothing wrong with that. So something major had to happen to break this cycle where we have been. And also, I agree with Bernd when he said that the volume is not huge, because it used to be up to a 2 million ton of imports, but the economy was in much better shape. And the truth is that the U.S. mills are not making money is because they had an internal price war. It was not imports.
Carlos, thank you very much for your honest comments. I really appreciate them. One last thing I'm going to say is there anybody... Oh, I'm sorry.
had a
No,
question.
go ahead.
I think European suppliers, South European suppliers also will start shipping some rebars to USA market depending on how Europe performs against the others. At this stage, their prices, FOB prices, are equal to around $600 per ton, 445 euros FOB levels, 450, 445 euro levels. And they also have some freight advantage, Spanish mills I'm talking about. So we may see some European penetration, and I'm hearing some contracts also in USA from European suppliers. This will be a second problem for Turkey, because we already face around 15% tax disadvantage in North Africa, in Algeria, and Europeans are shipping over 2 million tons of rebars to this destination annually. And Turkish mills suffered badly after the free trade agreement between Algeria and the European community. So I'm sure there is room for some exports to USA as well, some excess capacities.
So this will help Europe more than any other country, you think?
Exactly. Depends on, as I said, how Europe performs. But at these levels, they can easily offer 600 FOBs or 610 FOBs.
Very interesting. Any other destinations that you think that will contribute to the imports to the USA? Well, if you don't mind, yeah, go ahead, please.
I just wanted to comment on Carlos' comments a little bit. Carlos, I fully follow your theories there, but we must not forget that the rebar price does depend, of course, on the market and supply and demand, all this, and the scrap price. The scrap price is huge, as we all know, as far as the US are concerned. So scrap prices have been very low. As long as they stay low, it will be hard for anybody to make a credible price increase. Because scrap is part of the formula, of the pricing formula that the domestic mills have.
I think Bernd has a very important comment, because at the end of the day, there's a cost involved to it, and when the scrap prices go down, the price of the rebar may go down, but relatively speaking, we still expect, like Carlos is saying, that the prices in the U.S. will increase. But go ahead, Carlos.
Absolutely, that for the last few years we have seen how important the price of scrap is to the final price of rebars. But that only started to apply not long ago, when demand was so low that producers couldn't afford any kind of price change on their raw materials. as it was going up, which was basically how everything started, when the scrap started to go up and up and up. So the producer said, well, we cannot absorb a $20, $30, $40, $50 raw material increase. That's absolutely the case. But when you, which we are not there yet, yes, but when you experience better demand, the price of the goods is related to demand and not to the cost of production. So maybe in the future, we will see that formula change for the better again. But the truth, this is how it started. And today, I can see that the scrap is even softer today, and the price of rebars to the US has increased. So there is a fundamental change that I see coming up again.
Well, I guess this brings us to the next question that's been asked, and that is the scrap prices started to decline. And in the coming months, where historically the prices do decline, do you expect the scrap prices to reach to its bottom like we had seen in June? Peter, you can answer that one.
Hi, so it's Peter Marcus from World Steel Dynamics. In general, over the years, it becomes very difficult to predict price changes in scrap. And scrap was the key driver of prices, and it seemed to have no competition. But now the spot price of iron ore delivered to China seems to be having a huge impact on prices in China and in the world. So now when we look at the global landscape, let's say, we think that iron ore is somewhat more important than scrap, and scrap is important. My general intuition is that scrap prices are more likely to fall in the remainder of this year than to be steady and or to rise. Wow. And part of the reason is that the price of iron ore delivered to China is still about $130 or so per ton, and the price of iron ore seems to be high relative to prospective demand and to the production cost for iron ore. So if iron ore were to drop $20 a ton, let's say, this would make the integrated mills more competitive, and they would therefore wish a lower price of scrap to sustain the charging of scrap at the same rate into their BOF furnaces.
Well, thank you, Peter. Actually, we had another question related to this one, and maybe I can open that too, and we can discuss all at the same time. The question was, iron ore have been relatively cheaper, which affected some of the producers in China utilizing blast furnaces more than the electric arc furnaces. Do you see this trend continuing in the next 2 quarters, even though when we see this price of scrap easing? Maybe you can comment on that one as well. Yeah, why not? The question is, if, as you know, the iron ore prices have been relatively cheaper than the scrap, so then because of that, the Chinese producers have moved into using more blast furnace steel rather than the electric arc furnaces. And you know, do you see this trend continuing, and do you see that iron ore prices to continue to be relatively cheaper than the scrap prices?
Well, I'm not certain that the iron ore prices are in fact cheaper than scrap. As you know, 90% of the steel produced in China is produced via the BOF approach. And regarding the EAF steelmaking approach, in general, a fair amount of that steel is specialty steel rather than rebar. For sure, there's going to be a huge increase in the scrap collection in China in the next decade, and one would theorize that there would be a major increase in EAF steelmaking capacity, but in fact, if Chinese steel demand is flat, what steel mills will have the capital to build new EAF steelmaking furnaces and then perhaps tie them to existing continuous casters? So even though the price of scrap in China, the collection will go up sharply, it's not clear they're going to be building that many new EAFs.
Thank you. Michael, do you have any comments on this one?
I agree with Mr. Marcus entirely. There's a lot of uncertainties in the Chinese market in that there's a lack of financial willingness to invest in new production facilities, especially charging scrap, because there's no clarity as to what the pricing is going to be for scrap in the future in China.
Last year, the Chinese steel industry spent $80 billion on capital improvements, and this year maybe, it's a guess, could be $75 billion. So they are very willing and anxious to continue a huge investment rate, but it's not clear that they are trying to do this via the EAF route.
No, that's what I meant. I meant there's no money willing to be invested in electric arc furnace capabilities in China because of the overcapacity in blast furnace.
Well, you have another thing going on. You have a huge range of production costs in China because a number of the big companies have their own iron ore mines, which are pretty low cost. And there's a big expansion or attempt to boost the production at some larger mines and build new mines where the steel mills will have their own iron ore supply. So they're for sure, if you have your own iron ore supply, probably you have a significant advantage over an EAF steelmaker.
Well, to be a bit contentious, I believe that still in my lifetime there's going to be scrap exports from China to Korea and Taiwan starting in the next 5 to 6 years. And that may even end up in 10 years' time in the country of Turkey.
Okay, the Chinese had a 40% export duty on metallurgical coke. And the World Trade Organization said this was illegal. And this year, that export duty was eliminated. And as a result, exports of coke are up somewhat. And therefore, in theory, there's more pollution being created in China now than if the exports of coke were less. So a very critical development will be in the years ahead whether or not the Chinese government eliminates the 40% export duty on steel scrap. And I think that's an issue which needs to be understood, and whether or not the World Trade Organization at some point will say to the Chinese, say the central government of China, that you cannot sustain the 40% export tax.
Sharda, that's maybe something for the Turkish Steel Exporters Association to take up, because obviously that is an influencing factor on the worldwide scrap price.
I think Serdar is getting fresh information on the phone, so go ahead. And
he was on the phone with China checking up on the president.
Oh, yeah. Go ahead, please.
Well, Turkish steel mills are suffering badly now because scrap prices, American prices, for example, came down from $380 to $365 levels. But Turkish mills are having a serious problem to sell their D-bars and the discount level is around $10 to $15 more. Turkish mills reached, I'm talking about average of exports and domestic market, from $600 to today around $565. So decrease of prices in the finished product side is more than the decrease of average scrap prices. So the delta, the difference between scrap and finished product price is shrinking, is decreasing. We had healthy margin since the beginning of the year, but now the mills are feeling the pressure. So there should be two. Either Turkish mills should try to get a bit more dollars from their customers in the next quarter, or put more pressure on scrap suppliers. So which way the margin can be kept is a question mark. But my personal opinion that scrap suppliers is showing resistance to this pressure. Especially in the last few days, we are feeling more this resistance. One of the reasons is euro is getting stronger, and nearly 50% of deep sea scrap imports, total scrap imports I should say, close to 50% of total scrap imports is coming from Eurozone. And Europeans are having problem, and according to reports we are receiving, the available scrap in USA and in European zone is not so high compared to previous period. And the suppliers, scrap suppliers, are really showing stronger resistance. Either the Turkish mills keep suffering with much lower margins or even break-even calculations, or they will try to increase their prices. So this is a question mark. If US market is out, Egyptian market is out, we have problems with some of our neighbors. Domestic market demand, although it supported the overall equation, because domestic demand was quite strong since the beginning of this year, and it compensated the losses in exports. Turkish rebar exports compared to last year, the same period, is less, is declined. But this decline compensated by the domestic sales. And now we are banking on this to keep the margins. The producers are hopeful because there are some big projects in Turkey. There is huge infrastructure projects, airport project, highways, and also there are some projects by the local municipalities, and we have elections early next year, first half of next year. So some local municipalities are introducing a lot of new projects to support their election programs. We feel that the margins will be less than the previous quarter, but scrap prices also will resist to the decline. This is my personal opinion.
Serdar, thank you very much for your comments. I think you have touched a very important point. When we talk about scrap prices, we talk about scrap prices in US dollars. And when US dollar lose value against, let's say, euro, and like it is now, I mean, we have moved from 1.25 to almost 1.35. So when you have that change, you will see the change in scrap prices, and you will feel like the prices are increasing. Actually, it's just you know, equalizing with the dollar-euro parity. So it is a very important point. And I think what you're saying is because of the demand for Turkish exports to the neighboring countries that has really diminished, and with the new threat from, you know, anti-dumping coming from the US, you will have much less steel to produce, and therefore that will push the prices of scrap down. I assume that's what you're saying. Okay.
Well, the decline is there, but it's not so significant. Decline in production is not so high to bring these scrap prices down.
Oh, I see.
What I said that scrap suppliers are showing resistance to this decline. This is what we are feeling since a few days. The decline started from $380 for US offers, 80-20 HMS 1 and 2 as the base I'm mentioning, and it came down to 365. In our board meetings in Steel Exporters Association, we had some internal discussion, and all the mills were saying that US scrap price will reach to 345, 350 levels. This should be the price to balance the losses in finished product side. When I talk about finished product, I mean rebars, wire rods in general, scrap-based productions in Turkey. But I'm saying that since a couple of days we are seeing this resistance from suppliers. They are keeping the prices firm, and Turkish mills will get in the market. They need to continue buying, and as you know, we have after December we have also problem with CIS scrap, because of the river routes are closing down and the volume of scrap reaching to CIS ports are getting less and less. So Turkish mills slightly keep their stocks higher to get ready for less cargoes from CIS. And this demand, coupled with compensation of local market, I see that scrap prices will not go down to those levels which we were talking about 2 weeks ago. So it's going to be this level, maybe $5 more decline, but not much. This is my personal opinion.
All right. Any other comments on this one? Go ahead. You want to comment on this one?
What is the next question?
Okay. Well, thank you very much. I really appreciate the answer. The next question we have is it's about Europe, and the question asks is, what are the short-term and long-term effects of Riva's shutdown of its 13 companies in Italy? Maybe William can answer.
Yeah, well, first of all, it seems that there is a lot of political game in this whole situation with Riva. We all know Riva for decades being one of the most reputed companies in Europe, producing rebars, wire rods and everything. A very solid company. So all of a sudden they came into a struggle. Nobody really knows the background. There is a lot of gossip around, and I think it would be just unfair from anyone to predict that he really knows what's going on. At least I haven't met anyone who really knows what's going on there. But it's correct that after what is published, after the confiscation of 900 million, that the Riva factories in Italy had to go into a standstill because they simply had no cash to continue buying scrap, had no working capital left, and so it was a decision from the board just to stop it. So discussions are now going on with the government, because obviously this was a shock also for the government that such a prompt reaction came from the board of Riva, and I'm pretty much convinced that this will be settled in a couple of, maybe not days, but weeks, and that they will restart working, because it certainly cannot be of the interest of Italy to have those mills being shut, because first of all they were working profitably. They generated money, they generated jobs, they generated a lot of infrastructure, And honestly, I think it wouldn't be good for the rest of the Italian steel industry at all, because Rebar, with his 13 mills, or I've heard 17 factories, so probably also logistics and other stuff is involved, they are the basis for quite a number of other Italian producers in regard of logistics, for trains, for scrap, for whatever product you need in the metallurgical industry. If they would go bust, and if all these companies would close, it would have also a serious impact, because logistics for just the remaining ones would be much more costly. So it would certainly not help them. It would help the others maybe in the short run. That prices certainly would fly through the roof for a couple of weeks, months, till imports and other new sources would have taken up. So after a phase of orientation, where to get the material from, the price would come back to normal, but you would have killed quite a big infrastructure, which is very much important also for the rest of the Italian steel industry. So I think it cannot be good for anyone, actually, and we can only hope that this will be resolved. To what extent this may and can have impact on the other companies of Rebar in Spain, France, and Germany, again, a big question mark. I think we should not make too much speculation about it. It was mentioned from the board of Rebar that they are ring-fenced, that they are not involved even in case Ilva and the other Italian factories would go bust, that they are ring-fenced and are able to survive. To what extent this can and will then happen, we have to see, but I can feel quite a big speculation in the market and quite a fear in the market that when those in Italy are going down the drain, eventually also the others will follow, and this will have quite a severe impact in the German and in the Benelux market, because Rebar is representing probably 25 to 30% of the German rebar market, and on the wire rod probably even more. So there would be a big vacuum if they would really go bust. So if this is something which someone really is looking for, especially the downstream industry, I guess no. Well, the competitors eventually, but again, it will be an issue of a couple of weeks, months, till the buyers will have sorted out their new sources. Imports will come certainly for a certain period of time. Prices will go up for a certain period of time, but it will find their bottom level in the end. And so it will have a severe impact, and what is the real background, I think, is really speculation. Unless someone here in the audience has any more information, then we are glad to listen.
Willem, I think that Turkish Steel Association a few minutes ago did say that the gap that will be created by Turkish rebar not coming to the US, it will be taken by the European rebar. So it's possible that they will get some injection, coming to the U.S., from Europe, so it will help. There's another question I want to add that to, and then maybe we can talk all at the same time. And this is the question: is there a potential risk for environmental reasons for more mills, including ArcelorMittal, to close their plants in Europe? Maybe you can answer that one as well.
I think on environmental reasons, well, it's pretty much different from country to country, although we are in the Eurozone, but I think lots of European countries are having a different view on environmental issues. I think it's pretty much political driven if you want to have a steel industry, and to what extent you want to have a steel industry, and what burden you are carrying to continue the steel industry. I know a mill, quite a big mill in the south of Germany. They are getting an enormous amount of trouble with the Bavarian government on any kind of environmental issues, on dust, on this, on that, and the impact of their investments to handle these environmental issues is certainly enormous, and really makes them or gives them a hard life. And we know at the same time that there are other mills which are also in Europe, but more in the eastern part, that environmental issues are not really that big problem, but labor force is a problem, and that people are more interested in keeping and maintaining jobs for people rather than looking to collect the last piece of dust coming out of the chimney. So I think this is pretty much a problem of, or let's say a difference from country to country, and maybe also how many green people are sitting in the parliament, rather than an issue. I mean, what is certainly becoming an issue is the energy costs. Germany is running a real, this renewable, we call renewable electricity, whatever law. Renewable energy law, and that is really something which makes steel industry, which is a big consumer and high consumer of energy and electricity, that is really making their heart extremely difficult. They have some exceptions, so you can apply for being relieved from paying those, but this will become more and more a problem for the European industry. But so far, I hardly have seen anyone who really wants to close down. The only thing I read lately was that a mill in Spain, Megasa, that they are criticizing a lot their local government, and saying that they are not in line with their competitors, that they have to pay electricity costs which are around 20 euros higher than their biggest competitor in the same country. So here you can see again, politics is still a very, very, very influencing factor. If you see the latest developments on Salzgitter, for example, Salzgitter has lost quite a significant amount of money. The discussion started to eventually close down the beam factory in Germany, but 25% are belonging to the state of Lower Saxony, so instantly the state and the union said, no, we have to preserve the jobs, so this is not the case, we cannot close it. So politicians are still very, very active in our industry, and that's why I think it's more an issue of politics and preserving jobs rather than really energy questions or things like that, or environmental issues.
Well, on the energy, you really can't run a steel mill with the windmill, electricity produced with the windmill. But there's also another mill in Italy that I think has had the trouble from Ilva, the Taranto mill, that had environmental issues, and because of that, it's been shut down. Can you talk about that one as well? It's really producing mostly flat products, but I think it's one of the similar subjects.
That you mean Ilva?
Yeah.
Ilva. Well, again, what we know about that is just coming from the media. I haven't spoken to Emilio Riva for quite a long time, so well, there are environmental issues. What we read is that the company has over years and years not reacted to certain environmental problems which caused cancer to some of the workers. Their argument is that those issues were already happening before they even took over this mill some 15 years ago, and that the agreement with the state of Italy, or with the government of Italy at that time, was that Italy is responsible for everything which was polluted prior they took the mill over. So, okay, now it's 15 years ago. I think it's pretty much impossible to still evidence who is guilty for this part and that part and that part, because nobody knows what was the situation 15 years ago in Ilva. But yeah, it was said that there is that the board and the owners of Ilva, the Rebar family, haven't taken enough precautions and investments to prevent those environmental issues, that they found things which caused cancer to the workers, that they haven't done anything against this, and so yeah, the government came in, took it over, confiscated everything, blocked 8 billion euros, and it's quite an interesting issue. I mean, that just for an environmental issue, where still it's not clear if really the workers are being hit by this particular issue, to really take over a mill. This is like nationalization.
Well, there are rumors that close to 1 million tons of hot rolled coil in their inventory hasn't been really put in the market. Is that true? And do you think that stock is slowly entering to the market, or is it still waiting to be sold?
That is still waiting to be solved. It is true that an enormous amount of material did not come into the market. And even the Italian downstream industry is heavily criticizing the Italian government for what they have done there, because still Ilva is a big exporter, but it's also a big supplier to the domestic downstream industry, from automotive over pipes and any kind of industry using flat roll products. And so it was a big disturbance. And all of a sudden you have a company run by someone being elected from the judge, or from I don't know, from Gericht, from the court, yeah, from the court. So it's pretty strange, and especially it's more strange that this person who took this job over was the managing director of Ilva a few months before this was taken into nationalization, and then the court announced him to handle that. So I think it's a big disturbance for the domestic market, but meanwhile they are all over the hub.
Any other comments on the...
Before we spread rumors that Ilva has 1 million tons of hot rolled coil in its stock unsold, I think the number was that they had in between 1 and 1.2 million tons of work in progress, or material that was ready for shipment. And that includes concast slabs, hot rolled coil, cold rolled coil, hot rolled plate, tubes, and so forth. And I believe I read that Marcegaglia was able to take out some 250,000 tons that was produced for them, and that 100,000 tons of export orders were released for shipment. So I don't think that the situation is so dire compared to a mill that is producing 8 million tons a year. So a mill like that has to have work in progress.
Any other comments on the European steel mills? Well, then I'd like to change the subject to the wire rod. And from what I understand, there are rumors that there is a possible anti-dumping investigation coming for the wire rod coming to the U.S. from various destinations, and there's rumors of different countries that's been involved. And I don't know the situation, but I think Bernd can really talk about this.
Well, at this point, I can only say that there are rumors. I don't know against whom they want to file. I mean, there's really one country that dominates the wire rod scene. So if they file against more than one country, it will be probably three, and it will be China and China and China. So what we have to understand here is that the wire rod market really is a bigger market in the US for imports than the rebar market. We talked a lot about the rebar market because the Turkish mills are so affected by the dumping suits. But I mean, just to give you an idea, wire rod imports in a normal year are always around 1 million tons. We had some spikes. In 2006, we had 2.2 million tons of wire rod coming in. Right now, the numbers are a little bit dubious in the US because the Chinese rods, which dominate the import scene, they are being classified as in alloyed bars in coils, totally legal, totally above board, but it doesn't fall under wire rod if you look at the statistics. So I have to put some assumptions in here. So far, if I look at the wire rod numbers only, we have very few tons. Turkey, for instance, so far this year has imported a total of 27,000 tons. China, I have to look then into the alloyed bars in coils. Maybe there are some actual bars and coils coming in too. It's hard to tell what's wire rod. But I think China has imported so far 400,000 tons. The world, if I add the Chinese rods and whatever else comes in wire rods, so far through September, we've done 575,000 tons in imports. I think we are on our way to a normal year in wire rods of about 1 million tons. As I said, if they file the dumping suits, we have already some dumping actions against Brazil, mostly against Brazil is an action. Some Canadian mills may have a minor amount, but I mean they can't really, and we have it against Mexico. Mexico is shut out of the American wire rod market for all intents and purposes. So it really can be only against China. I don't know how they can drag in Turkey with 27,000 tons.
So Bernd, from what I understand from you, since China is the major exporter to the US by far than any other country, so this anti-dumping will be against China and not the other countries involved. Is that correct?
That's my opinion. But I would like to listen to my friend Sebastian here.
Thanks, Bernd. My name is Sebastian, Tata International. Bernd, what makes you think that, I think there's an easy argument to make by the US steel industry that, okay, if we go against China in dumping, then the Turkish mills will reappear as a major source of imports. So they might as well throw them into the investigation at no additional cost. Do you think that's a realistic scenario?
Yes. I mean, it is a realistic case to make that they do throw in Turkey, even though they are a minor player in wire rod now. But there is always the threat that they could become a major player. Turkey used to rule the wire rod market, the wire rod import market, the way they rule the rebar import market now. So there's always the possibility that they come with their wire rod into the US on a larger scale, especially now that there is some question mark about the rebars. I mean, it could be, yes, that they file it against it, but 27,000 tons?
Well, but the Turkish mills would be the most likely candidate to replace the Chinese imports. And I think the lawyer fees are insignificantly more if you just throw in another name.
Yeah,
to that.
yeah, it's true. I mean, it's true, and I cannot argue against that.
From what I understand, the majority of the Turkish imports now is drawing quality wire rod rather than mesh quality. And, you know, majority of the mesh quality does come from China. So one importer, well, actually one of the mills in Turkey yesterday told me that, well, you put a dumping on us on rebar, we're going to come with wire rod, because the same mills really produce wire rod as well. So probably it will replace, and something has to replace anyway, because we don't have enough production in the United States.
I don't know that.
Michael, do you want to have comments on this? Michael?
The United States has been a traditional importer of wire rods since several steel mills had to cease production during the 1980s and 1990s. We had lost to GS Steel in Kansas City, Raritan in Raritan, New Jersey. There was a shutdown of production capacity of American Steel and Wire. And at the same time, a lot of the wire rod requirements have been replaced by finished products coming from Taiwan and China. And so the wire rod market has a potential to improve in the United States, but obviously the situation of the Chinese wire rod has been very disruptive in the USA market. And as the European Union decided a few years back, European Union checked up on China and found that they were dumping wire rod into European Union, and therefore there's no Chinese wire rod coming into Europe presently. And that, of course, has created a situation for the European steel industry and also for Riva in Germany and Belgium and in Italy, that they are able to operate profitably by selling wire rods.
Any other comments on wire rod?
Yes, I want to come back to Sebastian's point there about are they going to throw in Turkey. I just did the numbers real quick. In order to file a dumping suit against anybody, you have to have, I believe, 3% or more of the imports. If they keep the numbers for right now, or if I look at the numbers now, 27,000 tons, they're not going to hit 3% of the imports.
Well, let me, hello? I don't think this works. Okay, let us move into another question that was asked. When US Fed has changed its policy buying subprime loans, it had dramatic effects in the world. The funds that went to emerging markets stopped and moved back to the US. This policy affected the interest rates around the world and threatened the construction industry, which had, you know, effects on rebar policy. Now that the Fed has reversed its policy, even though temporarily, how do you see this affecting in your markets in the near future? I'm going to start with Peter. Yes.
So regarding the value of the US dollar and what's happening to interest rates from the perspective of world steel dynamics, we think that because the outlook for steel demand and industrial production in the US is favorable, because of the huge investment in new energy, especially into natural gas, that the US economy is looking to be stronger than most others, and that the dollar will be strong. At the same time, it's evident that the BRICS have become a brick and are not growing. We see the incredible problems right now in Brazil and in India. So it appears that the developing world economy which in the past was viewed to be leading the global economy, is now stuttering, and that the advanced countries, especially the U.S., will be better. It also appears that inflation rates will be under control. So the consequence, in my opinion, is that there's a high likelihood that the price of oil declines. There's a high likelihood that the price of gold declines because we are in a disinflationary world. There's a high likelihood that China is going to grow at a lower rate in the future, if at all, in steel demand. So we kind of see the current condition as being also the pace of technological change is very high, and now when you build a new factory, the man hours are so low, one can build it in the United States and almost have a cost advantage over a factory in China. So we think the current condition is going to continue, that interest rates will rise, and that the developing world and China are not going to be contributing very much to the growth of the world as they have in the past.
Well, on the emerging markets, I understand that most of them were really affected by this Fed policy, and one of which is Turkey, and I think Turkey had a serious devaluation of their currency, and so far that the effects have been permanent rather than just temporarily. Maybe the Turkish Steel Association can comment on this one?
Well, the effect in Turkey is totally the opposite. We are Turkish market. I was mentioning that we have incoming elections, and there are a lot of investments in Turkey. But apart from that, construction industry was supporting Turkish steel industry since last 7-8 years. Because Turkey enjoyed a stable economy, lower interest rates, lower inflation, and longer-term credit lines for house sales. Automotive industry was enjoying quite significant sales and growth. But now our economy is facing this challenge. We have an economy where we depend on imports in terms of energy, and we have around $50 billion of cost for import of energy, and this is triggering the foreign account deficit. Turkey is one of the highest foreign account deficit creating countries in the world. So we are more vulnerable, we face higher risk than our other emerging market economies. In fact, when Fed declared their first decision in May, Turkish lira lost value and interest rates started to climb up sharply. And we first thought this might, the effect might be temporary, but as you mentioned, it is still there, and Turkish lira lost value from 1.8 to nearly 2. Today is around 1.97, 98 is floating. So this increase of interest rates is going to create some problem in the credit lines to the households. And our energy price is totally depending on imports, and we have continuous adjustment of energy prices. And this number of sales in housing, the number of new house registrations, we are forecasting to be lower and lower in the rest of 2013 and maybe 2014. I mentioned in my speech previously that domestic market compensated the loss of sales in the export markets. And in 2014, we are worried, and we are also forecasting a lower domestic sales of steel because of higher interest rates and more costly construction business. When we compare Turkey with other developing economies, Turkish market was very interesting for foreign investors also. In the last 3 months, there was about 4% of decrease in the foreign participation in Turkish stock exchange. The share of foreigners was 66%. Now it came down to 62%. And if this trend continues, this is another problem for our economy. If they keep getting out of Turkish market by selling their assets in Turkey, selling government bonds in Turkey, this will create extra pressure on Turkish lira, the devaluation of Turkish lira. And Turkish investors also, they were exposed in dollars mostly, because all huge investments in Turkish economy, recent investments, were foreign account basis, dollar basis. And this is putting pressure on all the Turkish players.
Thank you very much. From what I read today, the dollar-dominated loans have decreased dramatically in Turkey in the last few months. And obviously, from what you're saying, the interest rates that went up in Turkey still is up. So therefore, it will affect the construction industry, and you will see less of new construction really being built, which really will affect rebar, because the rebar is the first thing that goes on the ground. So from this point, can we understand that the demand for rebar in Turkey will decrease because of the higher interest rates?
Well, last declared growth of our economy was 4%, second quarter growth. And our government is still confident that they can register growths above 3% mark.
What percent?
3% mark, annual growths I'm talking about. The above 3% mark. They will keep the economy above this level. But in the past years, when Turkish economy was growing even 6%, 7%, Turkey registered up to 15-20% growth in the construction business. So this correlation between the Turkey growth and the steel growth was out. I mean, the Turkish steel demand was growing faster than the Turkish growth. But now the picture is not like that. Turkish steel growth and demand growth and Turkish economy growth is getting in line. Because Turkey invested a lot in the last 10 years since 2002 for the infrastructure projects, also for housing projects. Now it's much less, but still supporting the steel industry with the current growth rates. 4% growth is not small compared to European countries, compared to some big economies in Far East, even USA.
Thank you very much. Is there any other comments from emerging markets from around the world? Is there anybody here from Brazil or from any other emerging markets that can comment on this one? Do you want to comment? No. Do you want to comment? Excuse me?
He's a sharp guy, he said. Should we ask?
So we have in the audience a very experienced, astute observer of the global steel industry. It's Chuck Bradford. Charles, do you have any thoughts you want to add to this?
Is that Bradford? Jesus. Who's putting him on the spot?
Good.
Bradford report. Bradford report. Who's that? Bradford.
In a more general sense, we see seasonality beginning to hit the scrap markets in particular, but the big unknown is what's going to happen. This is now mostly the U.S. and it does impact Brazil with the new DRI plant that should be starting up in Louisiana any day now. The general consensus is that'll be import substitution to reduce pig iron out of Brazil, which will go someplace else, and it might bring down other prices. From the iron ore standpoint, the marginal cost of new production is below $40 a ton. Makes no sense for iron ore fines to sell at $130. So that'll come down. So in general, over the sort of medium term, well, let's do short term. Short term, scrap's likely to go back up again. I understand in the last 72 hours there's been a big pickup in orders in the U.S. after the Federal Reserve Board decided to continue its general easing policy, but that we would see the seasonality hit, the recovery that the U.S. mini mills need is still a little bit of a ways away. Generally, it's non-residential construction. That's the big market for steel in the U.S., maybe 40% of the total. It's had no recovery to speak of. More likely, that's a 2014 issue. Generally, 2 years after housing is the typical, but the housing recovery has been only mediocre. The level of housing is still pretty poor. When we look outside the U.S., as somebody said, the BRICS are in trouble. Maybe it was Peter. But we did see a bounce in the currencies in the last few days, which may change matters. But generally, it's a tough market to make money these days.
Any other comments?
I think there's one comment to be made. It's been many, many years ago since we were all concerned about inflation. And inflation is largely absent from the world steel markets. We see prices going up and down, $30 a ton here and there. But for example, in the BRICS countries, which we've just discussed about, is that the inflation concerns are just not there, even though they have sometimes 8%, 12%, 16% cost of funds in order to make new investments in steel production facilities. Whereas in the United States, the cost of funds is practically zero. And this is something that is going to also affect the steel investments and where people place their facilities in the future, because it's extremely expensive to build a new steel plant in Egypt. It's extremely expensive to build a new steel plant in Brazil compared to other places. And even places like Europe, where the electricity prices are not astronomical, will be having a higher competitive advantage over some of the BRICS countries. And the situation of scrap versus iron ore, that's something that nobody can really predict. I mean, there are many models, and people have been forecasting for many years that this is going to happen or that is going to happen. The fundamentals, of course, don't always apply.
Any other comments? Yes, sir.
Let me make some comments about China and what's been happening there, because as Peter's said, the growth rates are coming down. But that's pretty normal as the base gets bigger. But in addition, the beginning of last year, the Chinese changed their statistical collection system. And as we see the data, every month so far this year, there's been a revision upward of last year's numbers. So instead of an 8.7% increase you would have gotten on the original data from last year, now it's only 7%. Instead of collecting data from the provinces, they now collect it from 700,000 individual entities. Obviously, none of us can duplicate that. But the fact of the matter is their exports are up a lot. August was huge. The industry itself in China is marginally better off from a profit standpoint. Still, margins are quite poor. But a lot of the industry, maybe 75%, is government-owned, and profit isn't the big objective. The local province officials are measured based on GDP and employment growth, not on profitability of industry. So China is actually doing somewhat better than it appears.
I'm sorry, I didn't quite get it. Are you suggesting that the growth in China is actually much higher than what it has been, declared in the past due to the new way of collecting data?
Is higher than it would have been had we had the old methodology.
I see.
And the data that was presented last year. Basically, what ended up happening is last year was not as bad as it looked. But the numbers that we're seeing now for this year, for example, the current estimate of production is 780 million tons. It wasn't but a few months ago when the number looked more like 745. And last year originally was 716, but that's going to be raised probably to 725 at least. So a lot of it is data collection as opposed to actual changes in the business. But demand for raw materials is still there. The one other comment I'd make, the electric furnace in China is largely charged with hot metal from small blast furnaces, not scrap.
Yeah.
Thank you. Is there any other comments? Well, if there's none, I would like to thank you all coming, and I think we'll have to proceed to lunch. Thank you again.